Welcome back, everyone. I'm Jody, and I'm here with Fincher, who's about to make every small business owner's heart skip a beat. Fincher, today we're talking about bonus depreciation and Section 179 expensing. Is this the part where we get to write off everything but the office goldfish?
Well, if your goldfish has a recovery period of 20 years or less, sure, let's talk about it. But seriously, the big, beautiful bill just made it a lot easier for businesses to expense their investments. No fishy business required.
So, what's the scoop on bonus depreciation? I hear it's back and shinier than ever.
You heard right. The big news, 100% bonus depreciation is back and it's here to stay. If you buy qualifying property, think equipment, computers, even a new espresso machine for your office break room, you can write off the entire cost right away, as long as you have put it in service after January 19th of 2025. So no more waiting years to get your money back. It's like instant gratification, but for us accountants.
Well, we love instant gratification. So, if I buy a $10,000 pizza oven from my bakery, I can deduct the whole thing this year?
That's right. So even if you buy two, you can write them both off. Bonus depreciation is available to businesses of all sizes, and there's no dollar limit. It even works for used equipment as long as it's new to you. So if you find a gently used pizza oven in this example, you can still write it off.
That's wonderful. And that's a whole lot of pizza. What about Section 179? Is that like bonus depreciation's cool cousin who's always bringing the best snacks to the party?
Exactly. Section 179 lets you expense up to $2.5 million of qualifying property in 2025. And that phase out will start at $4 million. So it's perfect for small businesses that want to write off their investments right away. But there are some limits, like you can't expense more than your business income. And if you go over the $4 million threshold, your deduction will start shrinking.
Well, if I buy $3 million in equipment, can I use Section 179 for the first 2.5 million and then bonus depreciation for the rest?
You got it. It's like a tax deduction relay race. Section 179 can take the baton first, and bonus depreciation will sprint the rest of the way. And if you're a really small business, Section 179 is a great because you can pick and choose which assets to expense, property by property. Thus, it gives you a little bit more flexibility than bonus depreciation.
We all love options. What kind of property qualifies? Can I write off my new office chair?
Of course, as long as it's used more than 50% in your business. Most tangible property with a recovery period of 20 years or less is going to qualify. Again, think your machinery, your computers, your office furniture, even your vehicles, and some improvements to your building. But sorry, no luck on expensing your office emotional support cactus, at least under Section 179. So Section 179 is limited by your business income and has a dollar cap, as we've talked about. But you get to pick which assets to expense, whereas bonus depreciation has no income limit, no dollar cap, but it's automatic unless you opt out of it. And bonus depreciation can create a loss for your business, which you can carry over to future years. Section 179 will not allow you to do that. It's just limited strictly to your taxable income.
So, if my business has a rough year and I don't have much income, bonus depreciation becomes my friend.
You got it. Section 179 is like that friend that's only around when things are going great. Bonus depreciation is going to be there for you, rain or shine.
I like the rain or shine friends. Can you give me a real life example?
Yeah, let's say you own a landscaping business and you buy $100,000 worth of new mowers and new trucks. If your business income is $80,000, you can expense $80,000 under Section 179 and the remaining $20,000 with bonus depreciation. Or you could just use the bonus depreciation for the whole $100,000 with no income limit, no problem.
So what if I go big and I buy $5 million in equipment?
Now you're thinking really big. You use Section 179 for that first $2.5 million, but since you're over the $4 million phase out, your Section 179 would start getting reduced dollar for dollar over that threshold. Thus, the rest take bonus depreciation.
Thanks, Fancher. Next time, we're going to talk about employer-provided childcare and family leave credits.